video we will be discussing incomplete records. And we will also be doing an incomplete records question from a past paper. Okay, let's start with the definition of incomplete records. Incomplete records refers to a situation in which an organization is not using a double-entry bookkeeping system. Instead, it is using a more informal accounting system, such as a single-entry system, to maintain a reduced amount of information about its financials. In other words, the best way I can explain the difference between the two is a double-entry system means that every debit has a credit, and a single-entry system means that each transaction has only one entry. Alright, let's begin with our example. Okay, because this question is quite old, I will have it up on the screen and we will do it together. Before we start, here are the layouts you'll need for this question. Okay, let's first read the required section of the question. Required. Calculate the estimated profit or loss of F-Focus Services for the year ended 30 April 2011. Now, let's carefully read through our question and write the solution as we go along. F-Focus runs a small business, F-Focus Services, from home and does not keep proper accounting records. He needs to calculate the entity's profit or loss for income tax purposes and requests your assistance. You establish the following. So it has listed everything. And these are basically our assets and our liabilities. So we'll just go through them quickly and then we will continue on to answering the question. Furniture at cost. Our furniture is an asset. Tools and equipment at cost. That too is an asset. Inventory trading. That is also an asset. Bank favorable. That is an asset. Bank overdraft. That is a liability. Long-term borrowings, that is a liability. Creditors, that is a liability. Income received in advance, that is a liability. And accrued expenses, that is also a liability. Alright, before we continue, let's just read the additional information. A. F-Focus drew 100,000 Rand during the year for own use. That refers to drawings, which means it's not going to go into our statement of assets and liabilities for the year. B. Depreciation at 20% per annum on the cost price of furniture as well as tools and equipment must still be provided for. Now this one you can handle in two ways. You can either include it in the statement of assets and liabilities as at 30 April 2011 for the current year and just deduct the depreciation from the cost of the assets, or we can put it into the estimated profit or loss. I am going to choose to put it into the estimated profit or loss because I feel that that will just give it a bit more of a description. That is my personal choice, but you can do it your own way if you want. Alright, let's prepare the statement of assets and liabilities for the year as at 30 April 2010. Under assets, we have furniture to the value of 25,000 Rand, tools and equipment to the value of 46,500 Rand, and inventory trading to the value of 9,800 Rand. Let's total that up into our total assets, and that'll give us 81,300 Rand. Let's move on to liabilities. Under liabilities, bank overdraft to the value of 6,500 Rand, long-term borrowings to the value of 14,000 Rand, creditors to the value of 5,200 Rand, income received in advance to the value of 3,800 Rand, accrued expenses to the value of 1,600 Rand. Let's total that up, and our total liabilities comes to a total of 31,100 Rand. Now, If you have any issues with any form of assets or liabilities, I have already made a assets video that will be linked in the description below, and I will make a liabilities video as well, which I will also eventually link in the description below to help all of you. Alright? So no need to worry about that. Everything will be explained. Moving on, let's calculate the equity. So, our equity in this situation is equity equals assets minus liabilities. So we're going to take the total assets of 81,300 Rand and deduct 31,100 Rand, which is the total liabilities. That'll give us a total of 50,200 Rand for 2010. Now, let's prepare the current year. Statement of assets and liabilities as at 30 April 2011. Let's begin with the assets. Under assets, furniture to the value of 25,000 Rand, tools and equipment to the value of 46,500 Rand, inventory to the value of 10,200 Rand, and bank favorable to the value of 2,480 Rand. Let's total up the assets, 84,180 Rand. Moving on to liabilities. Let's start with the bank overdraft. And as you can see, for this year, there is none. So moving on. Next we have long-term borrowings to the value of 9,200 Rand. Next we have creditors to the value of 6,120 Rand. Next we have income received in advance to the value of 5,000 Rand. And lastly we have accrued expenses to the value of 1,300 Rand. Let's total up our liabilities. And if you add everything together, that'll give us a total of 21,620 Rand. Alright, let's find our equity for the year. Equity equals assets minus liabilities. So that means we will take 84,180, our total assets, and we will deduct 21,620 Rand, which is the total liabilities. This will give us a total of 62,560 Rand. Okay, let's move on to our estimated profit/loss. So, we'll start with capital at the end of the financial period, which is the current period. So that means we're going to take that total of 62,560 Rand and put it there. Next, we're going to put the capital at the beginning of the period, which is our opening amount, which is 50,200 Rand. So we're going to deduct that. Alright, next we're going to add in our drawings, which is 100,000 Rand. On a side note, just remember that drawings is not, I repeat, drawings is not an asset or a liability. That is why it is not treated the same. So we're still bringing it into account. This is not our statement of profit or loss and other comprehensive income. So we're just basically calculating to see what we have for the company, how we're doing. You know what I mean? And then we need to adjust for our depreciation. So, according to the additional information, our depreciation still needed to be accounted for on the furniture and the tools and fittings. So, how do we calculate this? Well, we take the furniture for the current year, 25,000 Rand times 20%, which will give us 5,000 Rand. We will put that in. Then we will have tools and fittings, the current amount, 46,500 Rand times 20%. That'll give us 9,300 Rand. Add them together, we have a total depreciation of 14,300 Rand. 12,360 Rand plus 100,000 Rand minus 14,300 Rand gives us a total of 98,060 Rand. So it looks like we have calculated everything, and that is your simple example on incomplete records. Thank you for watching and see you next time.